Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is Monday, August 7th. So welcome to the end of day video. We will go through the themes of the day. I will go through the indices, and I will talk about some of the individual movers where there was some relative strength in this market. First things first, risk disclaimer right there in front of you. If I can bring, there we go. Please read the full risk disclaimer right here, but everything that we're going through in this video is for information purposes only. So, let's kind of just start with what we saw back on Friday at the end of the week. One of the things I would say about Friday's price action is, the end of week summer Friday price action can be just like that all over the place, and I kind of left for part of the day. In the middle of the day, I had off, or I was planning on taking off, a half a day on Friday because I was traveling up north, up in Saratoga. And I went out for lunch, and before I did, I said, because the market seemed like it was trying to resolve to the upside, and I said, just be careful of how these Fridays are. It's a coin flip whether or not there's going to be some type of sell program or some type of a buy program, but there's not a lot of market participants in, so it could kind of really, there's nobody really who's going to buy the dip on a Friday. Ahead of a weekend in the middle of the summertime in August. So I just wanted to kind of state that first, because sometimes we could look at the charts and they look horrible, but sometimes you just kind of have to add things up a little bit and say, this price action, it's definitely not good, but it's also not that important, considering it was a summer Friday. So that said, I do want to go over the price action, but what we saw is a little bit of a follow through from, so not only the price action was poor on Friday afternoon, but we had a lot of names reporting earnings last week, and there are going to be some implications of that. Apple, we can kind of start with that chart even before we go over the indices, because it is such a big portion of the indices. But yes, that's a big breakdown in Apple, right? And what I think is pretty interesting is that we're not seeing, panic because Apple is breaking the 50-day, or broke the 50-day moving average on Friday, and has continued to go lower, right? Some people think, oh my God, if one of these names miss earnings, right, look out for the overall market, it's going to be horrible. But really what we're seeing is, rotation out of Apple, which you could see the volume, and I think that's indicative. The volume that you're seeing there on the screen is indicative of, yes, there's probably some selling out of Apple, right? And people will come back to Apple maybe once it comes down to this version point of control, 172.92, or maybe some other place. But the point is that there's other places in the market to kind of put your money. We're not seeing a full out unwinding of risk. We're just seeing a reallocation of risk, right? So let's move over to the S&P, and we'll talk about this chart here for a second. So one of the things that I pointed out in the weekend video for members is that, yes, this dip that we've seen so far in the beginning of August, it does look a little bit different than the dips that we've seen previously since the end of May. We saw a dip, very clean, these little dips into the 20-day moving average. Touch of the 20-day moving average, it got bought. Pull back again into the 20-day moving average, a little hammer bar, and we've moved up. And of course, we got a little bit extended. We have been that way. So yes, this is a break of the 20-day moving average, and this is, a little bit more cautious. Also, August is living up to the hype of it's not such a great seasonal month. So, what we're experiencing right now, so far this month, is very much par for the course in terms of what you see in August. And, also, even though it was a nice price action today to see the indices close on the highs today, but the breadth wasn't super strong for the day. So that's something that we're going to want to see. I talked about this. I'm not going to rehash this in this video, but we've talked about how the McClellan summation index, both for the New York Stock Exchanges as well for the NASDAQ, they provided a warning signal too, right? They started a crossover on, I think from Thursday's price action. I posted those charts Friday morning, And yeah, it's a bit of a change in tone. So what do you do with all these things, right? When you see price action do this, and when you see the McClellan have a bearish crossover, you kind of lighten up a little bit on your risk, right? And you know, you can control what you can control, right? You can't control what the market does, but you can control how your exposure is to this market. So the Dow, you could see, has got this nice green here in terms of movers. But yes, the Dow stocks, even with Apple in it, you know, looks pretty good. So, you know, maybe this is where the leadership comes from. Now, we haven't taken out those highs, but we're very close to doing so. And on the weekly chart, which is a chart I posted, one of the first charts that I posted this morning, was like, hey, this is a nice little neat pullback. And you know exactly where this rally could be faded. You know, if we break 394, excuse me, 349.36, if we break that level and go lower, then you know that this that rally is being faded, and you know, you kind of have to abandon the thought there. But for now, it's holding that top of value, and this could continue to be like a catch-up type trade, right? Because the Dow just broke above its value area a couple weeks ago, right? So Dow stocks, and again, all of these things, they kind of make a little bit of logical sense, right? The Dow stocks are bigger stocks. They've got dividends, many of them, right? They're a little bit more conservative, right? People want more conservative things when there's a little bit of volatility. You know, so that this trade makes sense to me for now. Again, things can change very quickly, right? And that's the way that they've been going. But one of the things that we touched upon too is, you know, watching. So we'll go back to the S&P chart here for just a second, right? So yes, we got down to the bottom of value, and for now we're holding it. Now, I do also look at the moving averages, the short term, because we did break that 20-day moving average. So yes, certainly a move back above the 20 and back above the 5-day moving average would be good confirmation. But what I was going to talk about is where we started this week, right? And Sunday's video that I sent out, hey, watch the bottom of value. If we hold on to this, right, that would be a pretty good sign, right? And this is something that I sent out earlier today too. This is right around 12 o'clock, right? Our little index snapshot, right, of looking at the value areas of the major indices on the 1-hour chart. Because again, the 1-hour chart gives you a value area that is based on, it's a week's price action. To this week's value area is based on all of last week's activity, price, and volume. So you could see all of them. Now, IWM, the one in the lower left, was a little bit iffy today, and it really did not perform today. The small caps were just barely positive for the session, but you could see the S&P, the Qs also was a little bit iffy today. That held where it needed to. See if I can zoom in here a little bit more. And then of course the diamonds, which is leading. Sorry, it's a little bit, the picture's a little bit fuzzy here because I'm zooming in on something that probably is not the best thing to zoom in on. But basically, you know, how we set this up for the day is I said, because I do send out a midday audio as well in our midday note that goes out to members. And I said, hey, you know exactly where I'm going to put on a hedge. And I said, if we end up breaking the value, if one of these indices end up breaking the value area, I may choose to short that one. Or you'll get more confirmation if a couple of them break the value area. So that did not happen, right? And we still have our levels to watch, right? So now, of course, there's a little bit of leeway now. I like when it's a little bit cleaner, but again, you know, to me, this is good, you know, price action and a good, you know, move after we saw a week of selling pressure. All right. Also, I talked a little bit about the VIX in the weekend video. You know, that talking about how that looked a little bit different last week, right? We're starting to kind of move back down here, right? So again, here's the difference was that basically since back in March, the VIX has made a series of lower highs all along. But last week started to look a little bit different. So this is going to take some time to work itself out. right? It's not going to be after you see a change in tone like this, getting above that previous peak. It's often not just going to be one day that this comes back undone. I mean, look at how long this took, right? This took a while, and that's also quite normal too. What's abnormal is to see one day spikes in volatility and then they completely come, reverse the other way. So we're still at a pretty low level in the VIX. Even before today, before today's sell-off in the VIX, which was down 7.8% today. Keep in mind, you're going to have some more earnings reports out this week. You're also going to get, which everybody seems to be talking about right now, is that the CPI and the PPI report are also coming out later in the week. So for now, areas that were showing relative strength, let me go back to my spreadsheet. We'll go through a couple charts here, but looking at the home builders, I mean, this is pretty amazing, right? To me, because you're looking at, a higher interest rate for a 30-year mortgage, right? We're hearing that has gone up quickly with interest rates. But overall, these home builders still look very solid here, and, less of a pullback. Notice the difference between the indices that I just brought up is that this did not, this really didn't violate, it only violated the 20-day moving average once and has been moving higher. And then if you look at a couple of these single names, this DJIA, really nice dip into the bottom of value, reclaims, even with Friday's end of day sell-off, the home builders did not give back the gains, right? Usually that's a sign. And you could see the follow through today with DR Horton up another 1.4%. Another one of my favorites has been Pulte. Pulte's back, just about back to new highs. So again, really incredible relative strength. Again, sometimes the price action is better than the narratives, right? The narrative is, why are these home builders, these home builders shouldn't be going up because interest rates are high and that's bad for home builders, right? There's other forces at play, right? We know that we've got a housing shortage right now. Nobody wants to move with a lower interest rate, right? Which also is a bit logical. So that's the story there. The industrials, right? One of the stars last week was Caterpillar, right? We had a level to trade against, and this was in our watch list for the weekend, right? That level, again, very easy. I like easy trades, 276.56, right? Also Deere, which I thought, was on our watch list the previous week. We kept it on there. And this had a nice bounce to it. Now it has to get above 433 for some continuation, but still this was a nice move, right? And you could see also getting above these short-term moving averages. So nice progress, still inside value, both on the daily chart and the 1-hour chart. So it's not breaking out here. It's not as strong as some of the others, but still pretty good. And then of course, Boeing had a nice day today too. This was a name that I've been holding since I added it after earnings, and really nice move back above the 5-period moving average here. Again, I really like the trend. I talked about that, once it made its break higher, that this was a big old sideways pattern. So the fact that it's holding in here, I think is pretty good looking here for Boeing. And then of course, I talked about Apple, but the other side, because I tweeted this out earlier. What's interesting is the XLK ETF, right? It does not contain all the FANG stocks anymore, right? So the XLK ETF, which I'll show you right here, the two top holdings are two names that didn't have the best earnings reactions. Number one is Apple, the other is Microsoft. You add up those two exposures, and that's about 45% of the ETF. The other names went into the XLC ETF. They did this change a few years back, right? So Meta, which is 25% of the ETF, and of course you have to add up the Google, and you also get about 22%. So you're looking at 47% of the ETF is Meta and Google. So let's look at these two charts. I went long some Meta in the beginning of the day because I like the pullback, and I know exactly where this trade is going to work and where it's not. If I can get it to come up here, let's see. There we go. Right. So nice pullback to the shallow pullback to the 10-day moving average. Excuse me, to the 5-day moving average, not quite the 20-day moving average, and holding the top of value. Now, yes, it did take out a VPOC there. on the daily chart, which may cap it. But at the very least, I think it should do a little bit of a bounce. And what I'm looking at here is just for a move basically for now, and I'll probably leave a portion of the trade on, but I'm looking for a move to through the top of through the value area for the week to 320. But here's where I knew where this trade wasn't going to work. If it broke 310, right, then I would have gotten out of that trade, right? Very, very easy. Also, we'll look at Google, because I think Google had a decent day too, right? Remember, these are the two names that had, pretty good earnings out of the group. Again, this is a little bit messy. Google has been a better, and besides the move on earnings, but has been a better thing to buy on the dips. It dipped right into the top of value. And it did make its move through the value area, so a bit stronger, and that's 131.86. All right, guys. So I'm going to keep it short here in this video, because I did do a longer video for members. We went through a lot of analysis, but there's plenty more to go through. But overall, I think pretty constructive tape. I think maybe the last thing that I'll talk about is the RSP. Right, which is the equally weighted S&P, right? So again, because you take out the Apple bias here, this is also trying to turn the corner back above those short-term moving averages. All right, guys, that's it for today. Have a great night. If you're not a member of Tribeca Trade Group, go to tribecatradegroup.com. You could use our coupon code, which to get off half off your first month. That's TTG 2023. TTG 2023. Look forward to seeing you in the trading room.